gonna be a good day. Wake up, today's 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 gonna be a good day.
Good morning, good morning. Welcome to Good Morning Crypto, where we turn your early hours in the morning into your edge in financial freedom. Today, I've got a few articles about the Fed chair speeches yesterday and a little article about the monetary policy that we're currently heading down and where it might lead us and the potential for another rate cut in December. So let's dive on in and get you prepped for success today. I've got the stock heat map pulled up. We've got NVIDIA that is sitting up 2% from yesterday. In the pre-market, it is continuing that little trend. We're kind of seeing a reversal on the things that were up being down and the things that were down being up. So just something to keep in mind on the stock side of things. We've got Apple that is sitting neutral. It is down almost 0.5% in the pre-market. We got Berkshire Hathaway sitting down 0.23%. It made some decent gains over the past week. In the pre-market is sitting up 0.11%. Amazon is sitting up 1%. In the pre-market sitting down just a little bit. Could definitely continue that trend to the upside though. We've got Walmart sitting up 0.93%. In the pre-market, it is sitting up 0.3% right now. We've got Eli Lilly sitting down 1.63. It was on a little bit of a tear the past week. It is now sitting down 0.22% in the pre-market. We've got ExxonMobil, which is sitting neutral, down 0.1%. It is up 0.17% in the pre-market right now. Tesla is sitting down big after some big gains. It is down 6%, 6.15% for the day. In the pre-market though, it is looking to take back some of those losses. It is up 2.5% right now. We've got Microsoft sitting up 1.2 in the pre-market, down almost 0.5%. We've got Google sitting up 0.7 in the pre-market, down 0.46% right now. Meta sitting a little bit neutral while the rest of that has gotten some pump, but it is up 0.28%, and for the pre-market sitting down 0.45% right now. For the crypto side of things though, we're definitely seeing some pullback. This is not too unexpected. As I had said yesterday, we were in extreme greed, and that's definitely not any different today. We've got Bitcoin, which is sitting down 0.31%. We've got Ethereum that is sitting down 2.36%. We've got Solana down 2.11. BNB is sitting down 2.41. We've got XRP, which made a decent little move yesterday, sitting down 0.427%. Dogecoin is continuing its little trend to the upside, trying to get back to that 40-cent mark, up 2.03% on the day. We got Cardano sitting down big, back to 53 cents. It is down 6.09%. Avalanche is sitting down 5.5%. And a coin that I absolutely hate is getting demolished on this pullback. WorldCoin is sitting down 10.24%. Let's hop over to the economic calendar real quick, because this is going to be the big mover for the day. We do have some mortgage rates that are coming out this morning. Won't be as heavy of a market mover. There's nothing super big on that. We do have some mortgage applications that are coming out. This will be kind of a little signal on people's interest in the housing market off of current bond yields, but nothing too important on that really coming out to this morning. We do have the core inflation rate coming out, though, right after that at 8:30 Eastern Time, that will be a big mover. We got core inflation rate month over month, year over year. CPI coming out as well. It's predicted to be forecasted to be pretty neutral, only up 0.25 on that last drop. We do have the inflation rate month over month and year over year. Those will also be a very big mover. As I had talked about yesterday, the year over year, not core, which holds more data in it, is forecasted to be up 0.2%. And while the rest of the data is neutral, you can kind of expect to see that play out a little more strongly. It is not very positive when you've been seeing these rate cuts coming in and your inflation rates start to tick back up. On the other side of things, though, you have seen this happen in this whole cycle where Europe started cutting rates before us, Canada started cutting rates before us. They also saw this little spike in their inflation data while they were cutting rates. They have managed to cool that off and bring it back down, though. So definitely something that I'm not too worried about, but that the market could be pretty worried about for today off of the data drop. That could definitely lead to some downside movements on some of these assets. We do have some more Fed chairs speaking at 9:45 this morning and at 1 o'clock and at 1:30. So that will also be some more information on how the Fed chairs are kind of gauging the market. We got some mixed information from them yesterday. Some of them think that things are okay, but two of them were pretty aligned, and we're thinking that this current monetary policy is a little restrictive and that they'd like to see some change in that. Other than that, we don't really have any other heavy data drops for America until later. We do have in the early mornings, when most of us are asleep, Europe is dropping some of their data as well. This is technically Thursday, but it is kind of our Wednesday night. It will be very early. We've got unemployment change quarter over quarter and year over year for them, and GDP growth coming out quarter over quarter and year over year for them. This will be a slight little gauge for how the markets can play things in that trading sector of the morning. Not as heavy of a market mover as us, but they are ahead of us in their cutting cycle, as I had talked about just a second ago. So this is kind of something that we can use to gauge where we might end up in a little while. Let me hop over to the fear and greeds. For the stock side of things, we are down a point after most of the market has seen a little bit of a retracement. You did have the few outliers. The things that were down while everything was up are sitting up. We're now at 67 on that fear and greed. Down just a point. Nothing too crazy. For the crypto side of things, though, with the little retracement, we're still up. We are up another 4 points, and at 84, still in extreme greed. This is definitely a signal that with the data that is coming, we could definitely see some big pullback. Now, we'll take a look at the chart just to see how big it could be, though. But this liquidation heat map might give you a little bit of a signal. We got a decent hotspot sitting right below us at that 85,733 mark. The other hotspot is sitting pretty high to the top side of us at $90,000. We did end up getting up that high the other day, and definitely was a point where a lot of people put in some shorts. If you look at a higher time frame, like the weekly chart, you can kind of see it's not really hot either way. So it's kind of more on the shorter term that we do see the liquidity that has started to pile up at that $85,000 mark. Let me hop over to the chat real quick. I see Alexander G in here this morning. Good morning, good morning. Good morning, Crypto Billy. Darren does things with the wake up. Today's going to be a good day. Good morning, Darren does things. We've got Dante Cabrero in here. Good morning, good morning. Kyle Fields as well. Randy Abbat and username in here. Don't worry, BC. I made it. I know you were worried. I'm never worried. I know you'll show up eventually. All set in here as well. And maybe a band-aid. Good morning to everyone. Let me hop over to the Bitcoin chart. As you can kind of see, we've got a little bit of a pullback from that high that we made yesterday at 90,000. We are sitting right above the 236 on that retracement. You can still see that money flow is extremely green on a 4-hour chart. So this is definitely a good thing to see for some strength in this area, and could be a little bit hard for those bears to kind of take some control. Might end up being more of some sideways movement and some consolidation instead of a big drop. We definitely did get some wicking off of the 382 though at that $85,000 mark that I was talking about on the liquidation heat map. So could just as easily pull down to that for a quick little grab of liquidity before we just continue our consolidation in this range. You can kind of see if I drop it back to a shorter time frame, the 1-hour chart is starting to look a little red on money flow, but we've got your prime oscillator, which is signaling that I could continue to the upside for a little while this morning. Your MACD is set to cross the signal line on the top side of things, so definitely a good signal for some consolidation in this range. If you drop it down even farther to a 15-minute chart, you can still see the short-term money flow is extremely green. So any pullbacks that we might see off of this data today might not be too crazy. There's a lot of positivity in the markets right now. People are extremely happy that we're going to see a little bit of shift in some of this policy. And they're definitely showing that in their risk on buying, and this could play out extremely well even if the data is a little bad. I am looking at that $85,000 mark to kind of be hit this morning and see if we can create some support there. It would be a slight break of trend. As you can kind of see here, we do have equal highs up at the 90,000 mark, but you're making some higher lows here in this range. So just something to keep in mind. We could break that little trend that's an uptrend in this area and see a little bit of a consolidation lower. Let me hop over to the news article that I had for the day. I'll zoom in a little bit so that you guys can get a little bit of a better view on that. U.S. monetary policy still restrictive, two Fed officials say. This was touched on in yesterday's speeches. The Fed Reserve policy rate continues to act as a brake on the resilient labor market and on inflation that is still above the 2% target. Two U.S. central bankers said on Tuesday, a view that appears to argue for more interest rate cuts, even as both signaled they were not ready to judge how fast or by how much. In my judgment, we are still in a modestly contractionary stance, but ultimately the economy will guide us in terms of how far we are needing to go in cutting the Fed's benchmark for short-term borrowing cost, Minneapolis Fed President Neil Kashkari said to Yahoo Finance. Speaking earlier, Richmond Fed President Thomas Barkin called the current rate levels somewhat less restrictive than it had been and said he could see scenarios where demand rises and the central bank needs to focus on containing inflation, and others where businesses start laying off workers and it needs to turn more to protecting the job market. With the economy now in a good place and interest rates off their recent peak, but also off their historic lows, the Fed is in a position to respond appropriately regardless of how the economy evolves, Barkin said at an event in Baltimore. The Fed cut its policy rate last week by a quarter of a percentage point to the 4.5% to 4.75% range. Short-term borrowing costs are now down 75 basis points below where they were 2 months ago, just before the central bank started reducing rates to bring them more in line with the falling inflation and what appeared to be a quickly cooling labor market. In September, Fed policymakers' projections were consistent with another quarter-point rate cut in December and 4 more like-sized reductions next year, bringing the policy rate to 3.25% to the 3.5% range. Since then, a lot has happened that could complicate the central bank's next steps. Inflation by the Fed's targeted measure was 2.1% in September, just above its target, but measures an underlying inflation that could strip out volatile energy and food prices have been stuck higher with little sign of recent progress. Economists expect more of the same when the U.S. Labor Department releases the Consumer Price Index for October on Wednesday, today. Monthly job gains have dropped, but the employment at 4.1% is low by historical standards. Policymakers are watching for signs of further weakening, which would suggest the need for more rate cuts, or of continued resilience, and they will get just one more monthly employment report before December 17th to 18th meeting. This kind of touches on the new administration and the policy shift that they're looking at for the economic standpoint. I've talked a lot about that. There's not the biggest reason to hop into this side. Just this one little part that I'd like to touch on. I think there'd have to be a surprise on the inflation front to change the outlook so dramatically. The bigger question long run is where we are going to settle. And that's kind of something that the whole market is looking at right now. They want to see where we're going to stop. It's not so much as what the next policy shift is going to bring to us, so much as where the current trajectory that we are in line to land sets us. You know, we had talked about the other day how the Fed chair was not going to resign if asked to do so, and I really don't think he should either. He's been the one in charge of steering the ship so far, and he's done a decent job, and this is why in the current cutting rate cycle, you probably shouldn't shift that. You might end up having someone come in with a completely different viewpoint on how things should be done that could just mess things up when you're in this current rate cutting cycle. Just to leave things how they are. He's going to be gone in 2026, and by that point, we will be out of the rate cutting cycle, and we will kind of see how things gauge after that. You know, he could very easily have steered this ship exactly how Trump would like going into office, and his policies could be very effective if we are in line with a steady economy. Let me pull up the bond yield. It is the 10-year. Made a massive move up, as you can kind of see. And it looks like it kind of peaked out at that high of almost 4.5%. You're making a lower high here. You've got a lower low here. Slightly lower, but still lower. So this is kind of what you want to see when your economy is sitting at a point where inflation is ticking up, but your investors want the more risk on assets where they feel more comfortable with things and they're not flooding into the bond market. You saw a lot of sell off on this. They feel secure in a 10-year where this is a good time to buy because they might not see these yields in a while if your current trajectory and the new policy shift end up setting things where Trump has talked about. So definitely something to keep in mind. The bond yield is looking pretty decent. You do have a few outliers. That 3-month is definitely in need of some more buying. It is sitting a little bit above that 1 year. But the rest of the bond market, besides that 20 and 30, is sitting kind of right where we would like to see things. I don't know if anyone has some assets that they'd like me to look at, but now would be the time to leave those in chat for me so I can take a look at them right after I go over a few other assets this morning. We have Crypto Billy saying good morning all set. Good morning Randy. Good morning maybe a Band-Aid. Randy Abite saying, hey, great day at Crypto Billy. Banana Republic, my man, why do you wear your hat? Your hair looks lit. I was wearing a hat because it was in that awkward stage. It was kind of in that short area where it was super froed, and now it's got a little bit of length and it's got some curls on it. So now I feel more comfortable not wearing a hat. Also, sometimes I just feel a little naked without a hat. Normally I keep my hair short, so there's nothing to really show off, but it's winter, so I want some extra warmth on my head. So I see Near has been requested, so I will definitely take a look at that after I take a look at the Russell and a few of the other indices that I was looking at this morning, and touch a little bit on gold. I did have some things that I was talking about on these indices where we're sitting above the 1 line on these fib extensions. We are now seeing the definite signs of a little pullback as the rest of the market is pulling back. You can definitely see these indices, which are a compilation of all of these stocks, pulling back a little bit too. So this 1 line on the fib extension could be a nice point to see some strength made. I would not want to see it lose too much below that. You do have the CME gap, which is coming down to 18,995. Could be a point to close before continuing this trend to the upside. Things are more risk off though, so definitely going to see slower buying on this. Your money flow is still extremely green on this. Your prime oscillator showed a reversal, but it looks like the reversal is more of a consolidation. That's why I've just got my eye on this little gap from here. I can kind of draw that out a little bit better so you can get a better view of it. The top side is that $19,080 mark, and the bottom side of that is going to be 18,995. For the Russell 2000 though, I had talked about a decent double bottoming point being that 50% line on the fib extension. It looks like we're kind of going to play that out going into this morning. You can kind of see here, you've got your MACD, which is now curving, where yesterday when we got these reversal signals, your MACD was still pointed up. Your money flow is kind of curving over as well. So signaling a little bit more pullback to come. We're sitting at 2,000, almost 400. That 50% line is only a little farther below that. It is sitting at 2,379. You have a massive gap down here that could get touched, but I don't think we're gonna see it for a little while unless people really, really, really don't like the data that we're seeing this morning, and the sell-off is very extreme. Let me draw out that gap for you too, so you can kind of see more what I was saying. The top side of the gap is sitting at 2,300, so you're only talking about about $100 move on that. But when you're talking percentages, sitting a little more extreme on that. The more traditional side of things for a dip, and would be kind of scary to see. Could be a multi-move though. Definitely possible over a longer term. We are in more of an uptrend though, so I don't know if we're really going to close this gap right now. I will just leave that gap drawn. I've talked about gold a few times this week. It's definitely been something I've been keeping my eye on. You know, you had some people talking about gold and it being a great buying opportunity. I know Eric Wallen, who is in our Discord, talked about he swapped out just a little bit of Bitcoin for some gold. I definitely see that as a decent move to have made. You know, this looks like it was a nice bottoming point before a continuation of a trend. I'd like to see some consolidation right here on this mark, but if we do get some negative data, could signal that you could see your more reserve assets be bought off of that data. You know, you might not see gold back below 2,600 for quite a while. I know Piper's talked about it as too. I agree with him. We could easily see $3,000 gold this year before year end. You do have the money flow, which is starting to head back up to the upside. You've got your prime oscillator, which just flipped back to green. Your MACD just crossed your signal line. So it's all kind of set to move on up. If we do consolidate here on this range, which is the 2,600 range, and make some strength here, could easily pull back up into this fib extensions 236 and maybe see a little move up to the 382. That 382 range that I'd kind of be looking at for the next resistance point, because we didn't really touch here at all on the move down. It's all kind of a fair value gap. Would be a decent point to kind of reject off of. You kind of see it's the middle line of this whole fair value gap. That's going to be 2,655. Let me take a look at silver. I had talked about this bottom point on this fib extension at $30.40. Kind of wicked down below it. $30.25, but I had said this bottoming point would be a nice point for maybe a little scoop up or a trade off of, and it looks like we bounced decently hard off of that. You can kind of see you're looking a little sideways on your prime oscillator right now, but it is green. Your money flow is extremely green. You've got reversal signals setting up, and your higher time frame chart is looking definitely set to continue that move. Here's the daily chart for you on that. You can kind of see that the MACD has got some decent curvature on that, and your prime oscillator is moving sideways on that. So this definitely could have been a nice local bottoming point to make a move on out. Kind of equal lows here, but I'm not too worried about that in the current state of things. With the data that we're probably going to see today being a mixed bag, you could definitely see some rare metals being bought up. here's the Dixie for you guys. I had talked about this yesterday and kind of seeing some resistance here at this point, which was our last high before the big downtrend. That high was 106 and 15 cents, and we've got a little bit of a rejection here off of it with today's data. You can definitely see some more downside on that. In bull trends, you do see the Dixie and your assets moving in tandem together. A lot of people like to say that the Dixie moves the opposite of Bitcoin, and it's true a lot, but when you have explosive bull markets, that is not always the case. And we are in that explosive bull market phase. So when the Dixie was moving up, everything was moving up. The whole market was moving up. And when you're seeing the Dixie pull back right now, which it's pulling back just a little bit. It is down from this morning where I had looked at things. It was up just at the top of that candle. The whole market is kind of pulling back a little bit. So I would look for some strength that we haven't really made on this 50% line at $105. So a little point that we could pull back to and continue that trend to the upside on. I see Anthony Soprano in here and Trade Intuition in here as well. Good morning, guys. Banana Republic saying, haha, I feel ya. I wear hats a lot too. Yeah, it's just a comfort thing, honestly. I don't like it. A lot of my hats just go with the outfit, so I'll switch them out a lot, and it definitely it's definitely a part of the field that I work in too. I work outdoors a lot, so wearing a hat is just a natural part of things. I got glasses, and I don't want to pay out to butt for some prescription sunglasses. It feels like a whole scam, So I've definitely just been more of a fan of wearing hats, but it's nice to have these times where I can show off the hair. I have Near that had been requested, so let me take a look at that. I know username hates Near, so he always loves when I take a look at it. If anyone else has any other assets that they'd like me to take a look at, please throw those in the chat. I will take a look at those. I got about 10 minutes before I gotta head on out for the day. I had said on Near a while back that I wanted to see it reclaim some highs that it hadn't been at in a while. Let me zoom that out from a 15-minute chart so you can kind of get a better view on that. That $5.60 range was where I wanted to see Near make some strength on. It's been a while since we've been at that range, and it's been a point where we haven't really been able to make strength on. Here you can kind of see it rejected off of it several times. We rejected off of it several times here, and it looks like we're doing the same thing here. We kind of, in this area, just blasted through it both ways. So it's definitely a point of contention and has some fair value gaps sitting at it. They're fair value gaps that are closed. As you can kind of see, it got closed here. But fair value gaps are often a point where when price comes back to it, we will bounce around in it again and retest those for those people that didn't get a chance to get in at that fair value gap the last time it had showed up. Let me zoom back down to a 4-hour chart for you. You could kind of see on the 4-hour chart here that your money flow is starting to wind down a little bit. Your prime oscillator is very red, and it looks like these divergences that have been piling up on this whole move to the upside might finally get that chance to play out. Your MACD is looking a little indecisive here. It's kind of down, but more of a sideways down, so could definitely see a little bit of a bounce up but I'm more so looking at that downside target where you see some heavy buying pressure here in this lower range, which was around that $5.11 point. You do have your 50, I believe that was the 50% on line on a fib retracement, which is sitting right below that at $4.95. Let me zoom it down just a little bit to an hour. You can kind of see, as I was saying, on your MACD looking a little sideways for your 4 hour. It's looking a little sideways on the 1 hour too. You do see your money flow is red, but your prime oscillator just moved to the green. So definitely could see some sideways movements. As I had said earlier when I talked about the data drop, these data drops are going to end up moving the market, with most of it being neutral and your big year over year total, not the core, the total inflation rate year over year being the bigger outlier, because it is not neutral and is looking a little bit negative. So definitely something that could pull those markets back. The $5.30 mark has been a point that I wanted to maybe see a decision on near, and it looks like the decision that it's going to make is continued downside. So that $4.95 mark could be a nice little point to make some support on before we try to reclaim this $5.60 range that has been such a battle for near over and over again. Let me see on a 15-minute chart kind of what we're seeing. Yep, definitely looks like for the short term on this morning, we've got curvature on your MACD. On the positive side of things, it does look a little sideways, so could definitely see a little bit of a late push up before some dump down. You do have your money flow, which is still red on that chart as well. Your prime oscillator signaled some reversal signals and finally ticked to the red. So this morning's looking like we could see some decent pullbacks. As you can see right above this 50% line on your fib, though, there is decent buying pressure. So you could see that stalling out that I had talked about at that $5.10, $5.09 range. So a couple bouncing points to the downside of things is that $4.95 and $5.10 range. So I do see AVAX has been requested by Baba Yaz. Baba Yaz, good morning, good morning. Let me pull up AVAX. We've got AVAX, which made some decent moves earlier. Let me zoom it on out so we can kind of get a better view from your daily chart. Oh yeah, some decent moves. Looking like that 50% line on the fib is going to be a little bit of a battling point. You can kind of see here we've gotten bounces off of it to both the downside and upside, and when we've been in this range, and when we haven't been able to hold it, we lose it extremely hard. When we did lose it extremely hard back here, though, this golden pocket was a nice bouncing point. So that golden pocket is sitting at $30.40. So definitely a point where we could see some support. Your money flow is green on a daily chart. So even though we're seeing this curvature, I could see that $30.40 range being a nice little point to bounce off of, because it's going to be a little bit harder for some of those bears to take control on a more macro scale. Let me get back to the 4 hour. You can kind of see your money flow on the shorter term of the 4 hour chart is looking a tiny bit red. You do have your prime oscillator, which is red, but is kind of signaling that we could see some bottoming signals in this right now. Your MACD is kind of pointed down, so definitely looking for a point where we start seeing some curvature on that before I'd start looking at any longs on that. Let me zoom it in a little bit more. Take a look at the hourly. You can kind of see here your money flow being red on the shorter time frame. But your prime oscillator has shown some oversold and a reversal signal. There's some light red on that prime oscillator as well. Your MACD is set to kind of cross on the bottom side of things. On a bottom side cross where we don't end up crossing this zero line doesn't necessarily show extreme strength though. So definitely something to keep in mind. We could easily cross, not end up coming up to this zero line on your prime, on your MACD, and definitely continue this little downtrend that we're in here. As you can see, low, lower high, lower low, and it looks like we just made a lower high. So that's why I'd be looking for a little bit of a downside target on there. That, like I said earlier, that $30.40 range could be a nice little point to kind of scoop along up. You do have on your 15-minute chart, your money flow is starting to come back in, which could definitely save things on that pullback. You do have your MACD, which is kind of looking a little bit sideways and like it could reverse into negative though. Your prime oscillator is extremely red and looking like we could be looking for a bounce here in this range. You can kind of see if we don't end up getting back down there, you've got $31.22 being a heavy point of buying back here and also in this range as well. You can see these wicks on a 15-minute chart indicate heavy buying pressure once we start getting into that $31.50 range. I'd like to see the reversal of trend be confirmed. This is a shorter time frame. You've got a high here, which is pretty equal with the high from this. So if we end up making a low here, I'd like to see it be a little bit higher than this, but I don't think that's how it's going to play out. You know, your higher time frame charts do show that the 1 hour and the 4 hour do show that there is some more selling pressure and that the money flow is just now starting to turn green. So I'd keep my eye out on that $30.40 mark for AVAX. I see Lunar Beaches in here. Good morning, good morning. How you doing today? Hope you have an amazing day. Amazing, radical, wonderful day, as you used to say. Sliding in here just as I'm winding the show down. I don't see any other requests for some assets, but on that, I will, oh, wrong one. I am not in the duel. I am going to wind the show down because I've got to go do some things before I go see if we're going to work today. I don't think we are. We got lots of rain last night. So thank you to everyone that showed up today. Make sure to hit that like button if you haven't and subscribe to the channel if you're not subscribed. We've got the morning market report with Piper and OC Guy coming on later today at 9:30. So make sure to check that out. Show them some love. Hit the like and subscribe button for them as well. We will have the Crypto Nightcap coming on later tonight at 8:30 p.m. Eastern Time with FD White and TradeFly. We're gonna get a lot of alpha there too, so make sure to tune in for them as well. Show them some love. They're doing really good things on the Piper Academy, and it's been great to see their show take off so well. Check out the links in the description if you like our TA. We've got the Discord and our WAP upperclassmen where we share a lot of these trade setups throughout the day, the things that we're looking at, and have a lot of fun in there. If you like our indicator packages, some of which I'd shown you, the Prime Oscillator, which I use a lot now. It replaced my RSI, which I used a lot. It's a decent little indicator there. So if you like that, check out that link in the description and can get a discount on that. Other than that, everyone, make sure to trade safe. We are getting a heavy data drop coming out here shortly. So make sure to use stop losses and don't do anything too risky because we're gonna see some volatility here. Everyone wake up because today's gonna be a good day.